Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for the weekend, and it'll be our weekend edition for Friday, and this is April 6th, 2018. What a day. At one point today, you got to look at this. You were down, 700, nearly 800 points because you got to 23,700. You closed 226 above that. If you added to it, you're almost 800 points down. Unbelievable action. And what's really going on is we're in a tit for tat where President Trump keeps upping the game on China. China's a pretty proud country, a pretty big country, and I've got my doubts that they like being pushed around in any way and threaten that. What scares everybody, and I said this today on Fox in the last 15 minutes of showtime before the markets closed, too dangerous to be in the market short or long over weekend. You don't know what somebody's going to say right now. And I realize you all have stock investments. Stocks are different than futures. Futures, it's all about the leverage. And that leverage can go both ways. Remember, it can hurt, it can slice you up, and it can make you rich. It's both ways that it cuts. So the danger is that we get another tat coming out of China. You walk in Monday morning, and something happens. Let's assume nothing happens over the weekend. Did the market overreact today? Then you come jumping back up. This is the dilemma the market's having. You're not getting the normal run to the gold moves either. I mean, you're up $7 on a day when the stock market's down pretty good, and you'll see for the week the market has been down. Bitcoin down another $1.30. The yen did get a bid today. So finally we saw some traditional buying come into the bonds, the notes, and the yen. And I had mentioned that on the Fox show. So let's go, if we could, and let me explain how this is all going to work. I start off by showing you a monthly chart, and from there I'll start building on charts and explain each of the indicators as we go through them. This is an area chart. And what it does is I'm only looking at closing prices, and then I draw this blue line to show that the last event that's happening is the market is thrusting to the downside. You're over the 18-month moving average of closes. That's what MAC means. On a long-term basis, when I look at this chart, we still haven't been able to get under this number, and that's very positive. I mean, it was month after month, if you think about it, from back here, 2016, when you finally got over, and you never returned to that average. When you come over and you look at a weekly area chart of closes, you have a different story. I've got the 18-week moving average of closes in red, and this market got under this a little while ago. And as it did so, let's get right over here. Here you finally were up and over it, 27.84, and right after that you break down to 27.51, and this time frame, by the way, if you look, is March 16th, not too far away. That is the first time recently it's done it. We had it once before. Remember that flash bang that you had in the market? I'll come right here. It's going to be where it ended on February 9th. So January 29th or so to February 9th, that was that big break. Now you're coming back, and again you started getting back under that average, and you're following suit right now. You did not, so far, close back under the low that we made recently at 25.9775. But the pattern is bearish, not bullish. The market's under that key average. Here's a chart, and let me show you how we're going to construct different things on a weekly bar chart. That's just a bar chart. Each line represents a week's worth of trading. I then put on a swing line. What a swing line does is it helps me, and it's certainly going to help you, define what is trend and risk. If you believe that the market's in a downtrend, you should have a pattern of lower highs and lower lows. Uptrend, higher lows, higher highs. What this market's got right now is a peak here, falls down, goes back up, peaks, and goes down again. The swing line looks at inside days, outside days, higher high days, lower low days, and it puts it all together automatically. And it's saying that if you're short, in order to break this trend, you got to get back over 26.79 75 roughly, and that from here is what, about 74 points or so. When you take a look at the other moving averages, and these are always important to look at, the 100-week is right here, the 200-week, we're far away from them. They could offer support if the market breaks down to them. What's another number that's commonly looked at? It's Bollinger Bands. These black dashed lines are an algorithm designed to keep the market trading within it 95% of the time. How I envision the market and how I teach to use it is the first time that the market is hit, be it on the upside or the downside, is where the pros often take money off the table. That does not mean they can't be putting it back on and coming out again as it hits it later. That is, so understand what that does. This is the first time you've hit the lower Bollinger Band, and I want you to go back in time. It's not even on my chart. That's scary. It means there's a change in the whole sentiment of the market from a technical perspective. You've got the market in a downtrend with lower highs, lower lows. You're under the 18-week average of closes. And admittedly, you hit the first downside target at 25.62 to actually the low just now was 25.52. So you've gotten to that point this week where the market has hit support. Momentum, though, is still down. If this gives way and you were to close under it, you might be headed to the 100-day average of closes. Let's assume on the NASDAQ, the same story. But it's not. It's a different story. You have a higher high and a lower low. There is no trend. That's the first thing. I know you're going to tell me you thought that was an uptrend. You think that's a downtrend. I don't. I think they're thrusts in the market, and that's how you define them as a chartist if you believe that a trend has higher highs and higher lows. Without that, doesn't mean it can't go straight up or straight down, but you can't call it a trend. I think you'll find most technicians will speak that way. Momentum is down. Bias is down. If the market falls further, it might go to the lower Bollinger Band at 62.14, which is still above the last break low that we had in that February time frame of 61.64. When we come to the Dow, it's in a downtrend. Lower highs, lower lows. The objective of the market had been, in fact, you hit it last week, I believe. Let's just see. You got down to 23.551, and the lower Bollinger Band was 23.473. You had just missed it. I was wrong. Visually, I thought it looked like it hit it. It made up for it because it goes down to it this week, hits a low of 23.306, and bounces away. The first challenges of Bollinger Bands often, not always, often bounce away. That does not mean it's a trend change. You also have this week an outside week down. That means in order to say that, this market has finished this leg down, you got to take out that high either this week or next week. Then I would call it a bear trap, an exhaustion in the market. Until that occurs, I still see this market in a downtrend. I see a downtrend in the Russell. Lower highs, have the lower low already. We don't know how far this low will go, but what number do you see that's acting as support? We got today at 1482.60, 1478.30, the lower Bollinger Band is the target. We'll see if the market can hit it. There is no uptrend, though, showing on that market. In the VIX, I was surprised today that the VIX didn't go even wilder. For the whole week, it's up 152. Momentum is flat. The trend in the market is up. You have higher lows, higher highs. Now, this high today took out that, so an outside day up momentarily gives me a swing line low there. So I still see the action, the risk to the upside, which is bearish the stock market. In the 10-year notes, for a change, we've got a little bit different to talk about. Momentum is turned up. The market is not trending. It's got a higher high and a lower low, and it is staying under the 18-week average of closes in red. I'm going to call the market neutral, but I think we saw safe haven buying taking place. The same happened in TLT. You saw a market go with higher highs, higher lows. Often, you will find that the 18-week moving average or the 18-day, depending on the chart, acts as a barrier if you're coming up, near-term support if you break back to it, and it's where trends develop from. And you'll see this over and over as you go to your charts and you start looking at them. In the dollar index, we've got momentum up, the trend down, lower highs, lower lows. To negate the downtrend, the market has to take out the 90.37.5 level. Resistance then would still be at 90.62.5. So I don't see anything turning in a trend there. And I've got almost the flip image of it mirrored the other way in the euro. It's still showing an uptrend with higher lows, higher highs. Momentum is down, however. If it were to take out 122.60, that would break the uptrend. And I believe I'm right on that number. Let's just check it. It's 122.60. Yep, that's what I thought. And we're still pretty far away from that. So we'll see what goes on there. In the Aussie dollar, all this trade war is not favorable to the Aussie dollar. If we get into real trade wars, will China need to manufacture as much to ship here? I don't know. But lower highs, lower lows, pressure on this. Canadian dollar, getting a bounce. You know why? The news coming out from Canada, Mexico, and the U.S. is that progress is being made. Don't buy into the idea that come next week at the Summit of the Americas in Peru that they make an announcement that they've agreed in principle and that's a deal. That's not a deal. It's no more than you and I sitting down. Hey, are you going to have an account with me? Yes, I am. Will you have we agreed in principle. Doesn't mean you ever opened it or funded it, right? That's what it is. Looking at the market, resistance, 78.92. We got today closing 78.35, and the high for the week, 78.67. So the resistance is just above this market. In the end, we've been in a long-term uptrend that has all the feel it's about to cave in. You lost your momentum. Now the red number's under the blue, so I'm going to call momentum down. You've gotten, finally, a point, another crossover that should be bullish, where the 18-week got over the 100 and you're not going up. If this market starts breaking down through that, it's a bad signal for this market longer term. We'll see if it can do that. In Bitcoin, where there's not enough data yet to really do weekly charts that have any meaning, I'm going to show the daily chart. This is the most powerful signal that I know of as a technician. It's called, out of the slow stochastics, embedded, locked in. When both the lines that make up the slow stochastic, we'll call them red and the dark blue or black, whatever color, they're really called the K and the D line. When both numbers go under 20 and start going sideways more than several days, you lock in a trend and the market starts moving with that momentum. It is not unusual to hit the Bollinger Band, bounce, like I said earlier, and then start leaning on it, especially when you have an embedded reading. The whole thing unzips if the red line gets over 20, and then I often look for the 18-day average to be hit. Brent versus WTI crude. Well, I think you understand what's going on. We're producing more and more oil. I mean, more and more. And we have gotten down to the point also where another event that just took place was that today, 11 rigs were added from last week, according to Baker Hughes. One of the biggest problems that we're going to have in America is we're producing so much oil in the Permian Basin and other areas that we're running out of pipe space in order to move it. There's only a finite amount, and I don't get why people aren't building more, but they're not. In any case, I'm going to discuss all these events in my research this weekend. So if you'd like to get a free copy, if you haven't had one, might be a good time for you to try it. And what you'll get from me is my written updates. You can get the oral update, too, if you want. If you live in the U.S., no problem. We call it into you. Actually, it's all automated. I don't have it calling abroad just because of the cost to control it. What we're going to also put you on is my daily videos in the morning so you can see something that you don't see. These are not the ones on YouTube. This is one where I say buy here, sell there, everything combined. Give us a call, go to our website, have a great weekend, and I'm Ira Epstein.